Hi guys. So I like to usually have a guest for these Friday Facebook Lives, but I couldn't get anyone this week. So I thought instead I would address the most common questions I get from home buyers, particularly my first time buyers, but applicable to everyone. So I made a little list here. I'm just going to be going through some of them today. So the first one, what is the first step? So it feels like this big thing, buying a house, especially buying your first house. Where do I start? So the best place to start is always going to be getting pre-approved. Knowing how much you're looking for is going to make the whole rest of the process smooth, but it's also the most intimidating part of the process for most people. So when people come to me looking to buy a house, usually I will give them a few recommendations for a few different lenders. I do suggest getting multiple opinions, not only to see if you're getting the best rates, but also just to see if you like the loan officer, if you're comfortable with their processes and the way they work. So I would say first is to get pre-approved. If you reach out to me, I'm happy to give you a couple of names and also a list of documents that would be helpful to bring with you to that first meeting with the loan officer. So second one, how much money do I need? So a lot of people feel like I don't have 20%. I don't feel like I'm ever going to have 20%. How am I going to buy a house? So currently I would say the majority of my buyers are using a 5% down conventional, the majority of my first time buyers. So a 5 or 3%, with 5% you can get away with no mortgage insurance, but a lot of them are doing 3%. So you've got 3% for down payment. Then on top of that, there are going to be closing costs that need to be paid on the loan. So the closing costs are comprised of a couple of things. Title fees, fees to the lender, but also it's going to be escrowing for your tax and insurance accounts. So right there at the closing, they're going to take a full year of taxes, a full year of homeowners insurance, and then you're going to have those fees on top of that. So usually we say that's about 3% of the purchase price, and that can fluctuate because of course, taxes aren't going to be same across the board on every property. But we estimate those at about 3%. So we've got, let's say minimally, we have 3% for the down payment, 3% for the closing costs. Within that, we do have the ability to ask the seller to cover some of those closing costs. So we can ask them on a conventional loan to cover up to 3% of the purchase price, which is about where the closing costs tend to come in. So if you are short on cash, that is an option to get you into a house for lower cash up front with just maybe a higher monthly payment if you don't have the upfront money. The closely related next question, of course, is there down payment assistance for first-time home buyer? Yes. A lot of my first-time home buyers use the Minnesota Housing Finance Agency's program. It's called Startup. You do have to take a education class. It's 8 hours. It can be done either in person. There's a ton of locations, ton of times, or it can be done online as well. And with that, depending if you do the deferred or you pay that secondary loan alongside your main mortgage, you can get anywhere from $8,000 to $12,500 towards your down payment and closing costs. So with that, even if you were to buy a lower priced house and that $8,000 might cover your down payment and closing costs, they do always ask that you have at least $1,000 of your own money in there. So I do have quite a few clients who bought a house for $1,000. So with that, you do want to just make sure when you're thinking about the overall cost, of course, you don't want to get it super close to the wire, but we kind of have that 3% down payment, 3% closing costs. Then you'll also probably want to get an inspection. The cost of that, if you choose to do radon testing alongside it, is about $500. And then there's also going to be an appraisal that's done before the loan closes, and that's going to be another $500. So I usually tell my buyers to have about $1,000 of liquid money that they can pay during the process. The rest will all be paid at closing. What else do we have on here? Oh, how long does it take to buy a house? So maybe you're in a lease. Your lease ends in June. Should I be looking now? How do we know? So if we do it a little bit backwards, so from the time you have a purchase agreement to closing is going to be about 45 to 60 days. When you write a purchase agreement, you will be able to choose a closing date within that. That's one of the terms that you'll have to decide on. Oh, we got Valerie and David. So 45 to 60 days, that's going to be there no matter what. The rest is going to be a little bit dependent on your motivations and your personality, quite frankly. I've had clients look at 2 houses, pick the second one, make an offer, we're closing a month and a half later. I've had clients look for a year. So you do want to make sure to build in a cushion, especially in this market when things are moving really quickly. People are losing out maybe on the first few offers they make in multiple offers. But I would say, maybe carve out a month of looking at houses to 2 months if you think you're really looking for something specific, and then that 45 to 60 days from when we find the house to when it closes. With a lot of first-time buyers who do have apartments and leases, the nice thing I like to tell them is that, so if we were to close today on a house, what day is it? March 9th. Your first payment wouldn't be April 1st. It would be May 1st. So if you do have an overlap in the time that you're in your apartment and the time that you have the house, it's nice because you're not going to have to worry about double paying because you're not going to pay for at least a month after you close on your mortgage. So that's always something that I know is nice for a lot of first-time buyers who maybe don't want to have to move out of their apartment and into their new house on the same day, and kind of being able to build in a little bit of overlap with that. That's good. So what credit score do I need? That kind of depends. So for a conventional loan product, we would say probably 620 plus. I know a lot of lenders want to see that at a 640 plus. The better credit score you have, the better rate you're going to get. So anything you can do to be working on your credit score is always going to be beneficial. You want to be at least at that 620, and then for FHA, minimum is about 580. If you are in that sort of 580 thinking about FHA, it can be really tricky to get FHA offers accepted in this fast-paced market. So I think that if there's anything that you can do in a few months maybe to get you over that 620, 640 and into a conventional loan versus an FHA, it's probably worth it. How do I know how much to offer? So we found a house that you love. How do I know how much I should pay for this house? So the process that we use for that is that I will look up some comparable recently sold properties for you. So usually I try to do, if possible, comparable properties within the last 6 months, within a ideally half mile, maybe up to a mile. It kind of depends on how good of comps we can find. But then we'll look at those, we'll look at pictures and square footage and specs for those and see how that compares to the property that you're looking to purchase. And then within that, come up with a number. So I advise my clients based on the comps ranges, but it's always going to be your decision at the end of the day. The tricky thing about the market that we're in right now is that we're seeing multiple offers. So maybe a house is priced at $200,000. That's a really competitive market right now. They might get 6, 10 offers in a couple of days. So we're probably not going to get that house at that point if we go in at that $200,000. So we actually look at going up in price from there, which can be kind of a confusing thing because people feel like, well, I want to get it for less, but that's just not really the market we're in right now. So with that, again, we're going to be looking at the comps, but it is a trickier area then, how much do we want to offer? So I always tell clients that you should offer enough that if you wake up tomorrow and you didn't get the house, you don't kick yourself for not offering, $5,000 extra dollars, but not so much that if you do get it tomorrow morning, you're going to regret. So that's going to be more of a personal decision. Where's the value for you? Do I have to pay you? So on the buy side, representation is paid for by the seller as long as there is a seller. The only situations we run into where that's not really the case is for sale by owners. Those are kind of a different beast. But in the normal situation, what happens is that a seller engages a listing agent and they decide on a percentage between the two of them that the seller is going to pay to the listing agent. Then within that, the listing agent says, I agree to break off this much of that to whoever brings in the buyer. So in effect, the seller is paying for both their representation and the buyer's representation. So the only thing that the buyer pays in a situation where the seller is already offering compensation would be our BAC fee, which goes to Edina Realty to kind of keep the lights on. Ours right now is $469. That's middle of the road from what I understand. That's something you're going to pay to any brokerage. It doesn't go to your realtor, it goes to their broker. But that will get wrapped in with the closing costs, but you don't actually pay for my representation on the buy side. What happens to after my offer is accepted? So we got pre-approved, we made an offer, we won it. What's next? So after your offer is accepted, there will be an inspection, unless you've chosen to waive the inspection, which I almost never recommend, especially for first-time buyers. The inspection is not only finding out what's wrong with the house or potentially wrong with the house, that inspector is kind of going to give you a roadmap to how to take care of your house down the line, showing you, hey, this is where your water shutoff is if something ever happens. This is where your gas shutoff is. Hey, that gutter looks good, but maybe you want to get an extender spout and just make sure that water is staying away from your house. So things that aren't necessarily going to be deal breakers, but things that you're going to want to know moving forward about how to care for the house. The inspection, like I said, if you do the radon testing alongside, it costs about $500. Go in there, meet with the inspector, he'll walk you through everything, and then you'll get a report afterwards. If there's any items that come up in that inspection that pertain to health and safety, we're going to go back with the sellers and negotiate on some of those things. If there was, let's say the furnace isn't working, or I just heard about one where a water heater was leaking. Those are some of the bigger issues that we're going to have to go back and see what kind of agreement we can come to with the seller on that. That's either probably going to be asking the seller to repair the item or asking for a price reduction in effect to whatever the issue is. There aren't always issues, but usually there's several, small things that we might have to go back and negotiate about. Once we're through that inspection period, your lender will order an appraisal. The appraisal is to prove to the bank that the house is worth at least as much money as they're giving to you for it. So that all takes place on the lender side, and you'll get this big, thick packet of papers afterwards showing how they appraised it, which comparable properties they use, but their process is going to be very like the process we use to determine price. Pulling up comparable sold properties in the area. Then within that, usually value comes back good. If the value comes back good, saying, okay, yep, you offered 200, the appraiser thinks it's worth 200, you move forward. If the appraisal comes in low, then again, there's going to have to be a renegotiation process there, because the bank's just not going to give you more money than the appraiser said the house was worth. But let's assume everything's good with the appraisal. So between the appraisal and closing, that's going to be the time where you're really just communicating mostly with your loan officer and the title company. There's not a lot that you're going to be communicating with me directly in that period, which is a good thing. So it's just going to be getting, income verification documents to the lender, talking to the title company about, sometimes there's little stuff like, oh, this one says your full middle name, this one just says an initial, what do you go by, what are we going to have on title, stuff like that. And then the last thing that you'll do with me before we close is going to be the final walkthrough. So usually about a week before closing, I'll reach out and talk about a time to schedule the final walkthrough. The final walkthrough is just us making sure that if there were any items we negotiated during inspection, those were done. And mostly that the person has removed all of their belongings from the house and nothing has been damaged since we saw the house. Once that's all good, we go to the closing. Closing usually takes about an hour, and that's when you actually get the house. So you will walk out of the closing as a homeowner with your keys. Yeah, and so those are kind of the basic questions that I get a lot, especially again from first-time home buyers. So I hope that was helpful. If anyone has any further questions, feel free to just send me a direct message on Facebook or, as always, call or text 612-729-7239. Have a great day.